Hello and welcome to episode 19 of the Craving Crypto podcast. In today's episode, I'm going to be teaching you how to start cryptocurrency trading in 7 easy steps. So let's get right into this. Okay, so as always, we have our document here. Let's get right into the market overview. On coinmarketcap.com, Bitcoin is at $119 billion in market cap. The price is $6,955 and the 24-hour change is down 2.37%. Ethereum is at $41 billion in market cap. The price is $405. The 24-hour volume is 1.3 billion and the 24-hour change is down 1.7%. Ripple is at $16 billion in market cap. The price is at 40 cents. 24-hour volume is at 244 million and the price is down 5.9%. Bitcoin Cash is at $11 billion in market cap. The price is at $690. 24-hour volume is 322 million and the 24-hour change is down 3.37%. EOS is at $6 billion in market cap. The price is exactly $7. 24-hour change is $472 billion in volume, actually. And the 24-hour change is down 1.61%. So clicking on the total market cap here, we are at $251,421,253,000 in market cap. The price is falling into the support zone that we were talking about in the last Craving Crypto between 236, 250, and we're looking for this to hold. If we do make a new low in this market cap, I do not suspect us to drop that much further. The next support level would be about $200 billion in market cap. Of course, you can have your stops or be aware of these support levels if they fail so that you don't have to ride the further downside. Overall, things are looking pretty good. The altcoin market bled a little bit further than expected, but on my Twitter, I mentioned to everybody that the Bitcoin dominance is on a huge downtrend, and we're hitting downtrending resistance on this dominance, so I expect the altcoin market to be picking back up very quickly here, along with everything else. So the market cap looks good, and we're still expecting that reversal. We're just waiting for these higher lows to be forming, or for that potential secondary low to come in. Okay, so let's get right into our steps here. Step 1, decide whether you're trading or investing. First of all, you really got to decide whether you're a trader or an investor. For me personally, I do both. I recommend that most people do a little bit of both, but you have to really decide what you've got time for. Some people might have more time to sit around and trade. Other people might have day jobs and they will probably do better doing investing. So it's a very personal thing for you. I like to trade more. I like to trade 2 or 3 month cycles, and because of this, I do 70% of my portfolio in a trading portfolio, meaning that I buy and sell and buy and sell and buy and sell. Investing is a little bit of a different strategy where you just accumulate. You tell yourself how much you're going to put in either monthly or yearly, and you just average in over a long period of time and hold it as you play a bigger trend. So you really got to decide what works for you and go from there. Step 2, pick starting amount. So obviously this is another thing that's going to be very personal. You know, I don't know what your income is. It doesn't really matter. Just take a percentage of that income and decide, okay, I'm going to save up $1,000 or I'm going to save up $10,000 or I'm going to save up $100. It really doesn't matter. Whatever is inside of your kind of scope that you can afford, that's what you want to start with. I do recommend that if you're a beginner, start with less, and then as you get better at it and save a little bit more, you can increase the amount that you're working with. But if you're new to all of this, don't put in $10,000, and especially do not trade with money you can't afford to lose, such as a life savings or selling an important object that you need in your daily life to start trading cryptocurrency. That's just not smart, and that's not what the top traders are doing. Or step 3, put risk management in place. Okay, so risk management is another huge thing in trading. I always tell people you need to keep at least 30% of your portfolio in dollar tether or US dollars. So as a beginner, you might come over here and you might put $1,000 into Bitcoin and you put it all in at once. That's not smart. You want to go ahead and put maybe 50% of it in Bitcoin or 40% of it in Bitcoin, then get 30% into the dollar, and then have some more into the dollar set aside for when you're ready to put maybe 5 or 10% into little altcoin trades that you're taking and trading the swings. The reason for this is because if you're heavily invested in something, you're going to care a lot about the direction that it's going. It takes the emotion away when you play with small, workable, logical amounts and think big picture. Tell yourself, okay, I'm going to try to make 10, 20% a month trading or whatever your goals are. And that way you're not telling yourself, okay, I need to put 100% of my portfolio into this coin because I want to make $1 million. That's not smart. It's always better to make lots of calculated decisions than one hopeful, guessy decision. So risk management is a huge thing in trading. It will take emotions out of it. And that's how every single profitable trader became profitable today. I promise you, Goldman Sachs trading desks, all the professionals use risk management to eliminate the emotions involved in trading.
Step 4, make a trading plan.
This is huge. Most people come here and they're trying to take shots in the dark. Don't be that guy. Take some time, make a little Google document for yourself, write up a setup criteria, meaning, okay, if this lands onto this Fibonacci support level, or if this panics 70%, or have a criteria that allows you to take a trade, enter, and then have a criteria for exiting a trade. I will not lose more than 10%, or I want to at least make 30%. And then that way you're never guessing whether you should be in a position or not. And if you need to make adjustments to your plan and change it, you can, but you're not taking shots in the dark, and you can increase your accuracy and become a little bit more of a sniper.
Step 5, make reasonable goals.
Make reasonable goals for yourself. Some people come into this and they're like, okay, well, I just got $250 and I'm going to try to make $1 million in my first year trading. That's unreasonable. Tell yourself if you have $250, make $10,000 or $5,000 in your first year trading. Set it a little bit high so you push yourself, but don't be ridiculous. You need to make sure that you don't give up, and some of that has to do with mindset, so you want to have a reasonable goal that will allow yourself to continue with that mindset and not overwhelm yourself when things get rough.
Step 6, educate and practice.
This is huge. I personally have a VIP course. You can go to highaltitudecrypto.io. I have over 140 YouTube videos on the matter you can go watch. There's tons of other creators on YouTube teaching this stuff you can go watch. There's also a ton of Wikipedia articles, Investopedia articles, which is a great resource for learning, investing, and trading. You've got Google Images if you want to look up patterns. It takes some education. Tell yourself maybe an hour a day you're going to take and set aside for trading, and then an hour a day you're going to educate yourself in trading. And then that way you practice it, and that way you continue to gain knowledge. You know, all of the biggest billionaires and millionaires in the world are part of book clubs, reading clubs. They love to educate themselves. And the reason for this is because more knowledge makes for more money. And that's how it works at the end of the day. So
Step 7, have fun.
And most people will see this and be like, okay, what are you saying right now? Why would that be a goal? Why would that be a step? The reason is because if you're not here to learn, have fun, and enjoy yourself, you're going to give up. It's hard to learn trading. It's not going to be overnight that you learn this stuff. It might take you a year, it might take you 3 years, it might take you 10 years. But if you're not having fun doing this, you're going to give up. Attitude is huge in trading and really in life. If you're going to do anything, keeping the right perspective goes a long ways. So personally, I like to treat it like a game. Don't put too much stress on yourself. Obviously, you want to win and succeed, so don't be too easy on yourself, but don't be so hard on yourself that you want to give up, and don't get down on yourself when you make mistakes, because that's how it goes. If you're learning the piano, you're going to mess up a whole bunch of times. You know, you mess up 1,000 times before you get it right. But once you know how to get it right and you get that consistency in place, you know, it's like Bruce Lee. You want to practice that kick 10,000 times. If you practice that kick over and over and over and over again, you might really suck the first 1,000 kicks, but once you get that kick in place, you're going to really know how to do it. So practice, have fun, and enjoy it, and it will really increase your success rate and overall probability of becoming a profitable trader in this space. Okay, so we'll do some Q&A from the comment section. Jonathan Noel says, given your grasp of the unknown, what is your favorite coin for this bull run? Is Bitcoin the best bet for maximum return? So this is a really great question. Thank you for the comment. I appreciate the positive words and the question. So we'll get right into this. Yes, Bitcoin is a really good investment for this run up, but that doesn't mean it's going to give you the best percentage gains per se. You might get better percentage gains with a few different altcoins, but Bitcoin is going to be the lowest risk. So this goes along with risk management and what we were talking about earlier. Bitcoin has the best track record, has the biggest market cap, gets the most media attention and media coverage. So it's really your lowest risk and highest potential for return. Even though some of the altcoins might give you better percentage gains, I always tell people to keep majority in Bitcoin. Something like 40 to 30% will do you well in the bull run. So, keep that in mind. If you take altcoin positions, they want to be small, 5 to 10% trades. You don't want to be putting 30 or 40% in any single altcoin. That's too much risk. Even though they might have better returns, you want to keep a level head and not get too greedy, and that will serve you well. So just like Bitcoin Phoenix right here up at the top says, spot on, I'm holding 50% Bitcoin right now. And I've been telling people to do that all through 2017 and all through this year because it has the best track record, the highest potential for profit considering risk factors. So again, you might get a little bit more technical percentage gain on altcoins, but you're going to want to hold majority in Bitcoin. Okay, so I hope you enjoyed this episode. We've got the Coinigy sign up right here if you want to do charting. BitMEX right here if you want to do leveraged trading, although I do not recommend this for beginners. My Bitcoin address if you like what I'm doing, and my website if you want to go check out my VIP course and start educating yourself. The VIP price change is in place now, so you can go look at those. Use discounts in the description below if you want to get in on that.
Thank you so much for tuning in today's episode. I hope that you learned something. Hit those comments down below, hit that like button, hit that subscribe button, and I will see you guys in the next episode. As always, stay profitable out there.